When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon. Welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is Friday the 8th for the weekly wrap-up. Let's take a look at see where the market closed off here today. Corn for December trading down 7 3/4 cents. Soybeans November up 6 3/4, and wheat in Chicago for December trading down 13 cents. Logan, soybeans, very interesting here between old and new crop. Both of them moved higher here, but September relatively strong here. What happened there?
Yeah, we saw a lot of strength on the old crop bean contracts here this week, both in September and August, which is going off the board. But most importantly here, looking at September, we saw about 30 cents added onto September with respect to November here this week. And I guess when you look at the fundamentals of the old and the new crop bean market, it's not that surprising based on what numbers we could be getting out from the USDA on Tuesday. We know old crop stocks are still quite tight, and as you mentioned on yesterday's show, there's a good chance the USDA is going to need to move their export sales number higher for 2013-14 soybeans on Tuesday. So a market environment like that obviously lends itself to a little bit of strength being put back on the old crop. Seems like we might have seen that today in what overall was a relatively quiet trade day. As we talked about a little bit here earlier in the week, I think a lot of the focus is going to be on the corn yield number out Tuesday from the USDA. If you take a look at this table here, the first column shows what the USDA reported in July. The right column here shows what, on average, analysts are expecting on Tuesday from the USDA. You can see here the average analyst poll is looking for 5 bushels per acre added to corn yield. But if you look at the actual individual analysts within that poll, we have some traders down at 165, some traders all the way up at 175. So when you have that kind of variability, it lends itself to volatility on report day. If we take a look here at ending stocks, average analyst guess looking for 400 million bushels added to U.S. ending stocks here on the new crop, just getting above 2 billion bushels there. So those are numbers to keep your eye on here on Tuesday. We're going to be getting that report at 11 o'clock Central Time on Tuesday. Keep in mind, if you're going to be out of the house or away from the office, we have a great mobile trading app that allows you to view live quotes from Chicago, place positions, monitor your account, and if you want to take a demo of it and have those live quotes going for report day, you can visit us over at grainhedge.com and take a demo. It works great on the iPad, iPhone, Android, or tablet. Cody, it is Friday here, and we wanted to break down the cash market. What did we see there? We saw quite a bit of weakness looking at beans there.
Absolutely, yeah. We actually saw spot beans down 14 cents on the week. Now, we were calculating spot beans off that November contract, so it is very interesting. We saw basis decline despite the fact that we saw that spread between September and November strengthen here. So we are seeing the cash basis in the spot market really moving kind of toward that convergence here with that new crop price there. So the bottom line, when you take a look at this new crop, I wanted to kind of show this week. You're seeing a very significant weakness in that northwestern part of the grain belt. North Dakota, South Dakota, Nebraska, and western part of Minnesota are all suffering here from increased transportation costs due to the rail market. Now, we've talked about this quite a bit. It has been, it's been in the news. It's been in the forefront of our minds, particularly last winter here around March when really the rail problems were at their height. But this year, we're actually seeing it really start to affect new crop basis. We're seeing significant discounts compared to last year. For corn in particular, we're seeing the largest discounts, down 15 cents compared to last year's new crop basis here around this time of the year. When you look at soybeans and that map there, you'll notice it's not nearly as bad, yet it is still weak. We're seeing the majority of the weakness here between -15 and -5, with some areas with significant weakness of of greater than 15 cents below where we were last year in terms of basis. So the bottom line here is you look at these transportation costs, you're seeing significant increases in the secondary and the primary market. You're seeing bids here between $2,500 and $3,300 per car for October delivery. That translates really into about 68 to 91 cents per bushel. So the bottom line is the transportation costs are increasing here, and this is going to have a very big impact. It's already having a very big impact on new crop basis.
Yeah, absolutely, Cody. And as you said here during the webinar that we did on Tuesday of this week, there are some basis opportunities that out there in the cash market right now, based on some of these facilities that are able to find rail at a more competitive rate. So that should lend itself to some basis opportunities as we enter harvest.
Absolutely. And you know, one article that I was reading, it was about a South Dakota merchandiser. They had multiple plants all throughout South Dakota, and they were saying that their facilities were full. They were actually having to turn away grain. So the difference, you know, there are trucking opportunities. If you're looking to sell spot grain, whether it's wheat right now, or whether it'll be corn, soybeans down the line here, you know, it's not necessarily that there's great opportunities, but if you don't want to get docked, that huge discount here, because storage is at such a premium right now.
Right.
If you don't want to get docked, you may have to move, you know, 50 to 100. I mean, you go from merchandising or selling your grain 50 miles away from your farm to selling your grain 150 miles away from your farm. There are opportunities out there. Some facilities have locked in rail freight earlier, have been more proactive here. They have better relationships with rail brokers. So there are trucking opportunities out there, and we can help you guys find them. We have some tools here at Grain Hedge that allow us to help you calculate your best selling opportunity on a day-to-day basis. We can send you those opportunities in an email, whether you want them Monday, Wednesday, Friday, or just any day of the week. So give us a call at 877-472-4607 if you want to learn more about any of those services here as we move toward this marketing of our new crop grain.
Yeah, absolutely. Well, this year should be quite a bit differently than last year. And in a market environment that we've seen sell off substantially, obviously every cent's going to count. So as Cody said, we got a great tool available here to get the most out of those cash sales. Thanks a lot for joining us here on GrainTV for a Friday. As I said, we get the USDA report out on Tuesday of next week. That's really going to be the highlight of next week's trade action, and in particular for the corn crop, could give this market a lot of direction, even as it's been trading sideways here for really the last week, 2 weeks here. So if you have any questions, visit us over at grainhedge.com or feel free to call the office, 877-472-4607. Have a great weekend. We'll see you back here on Monday.